Kelly, you haven't really talked about IULs, the Indexed Universal Life Policies. Well, let's do that a little bit today. All right, so the ULs, IUL in particular right now, which has been popular for several years and still is today, are a very popular tool within the industry. And I gotta tell you, one of the things that really upsets me, professionally, not personally, is when our own industry pits themselves against each other, meaning you have whole life practitioners that talk crap on the IULs, and you have IULs, certainly, those agents that speak very poorly of whole life. And that goes down to my fundamental discussion about they're just financial tools. It's like the hammer making fun of the screwdriver. They accomplish different things. There's a lot of similarities between these two, certainly, but there are some key components that people need to be aware of, and I want to bring one of those components to your attention right now. So just today, actually, this morning, I'm working with a gentleman, 67 years old. 5 years ago, he worked with an agent and took his advice and got an IUL. That's fine. He's been able to pour a lot of money into the thing, but he's noticed this one key factor that I want to touch on. He's noticed that the internal cost is increasing pretty drastically. And here's the reason why this happens. ULs buy a 1-year renewable term to buy the death benefit. And of course, in my previous video talking about modified endowment contracts, we have to keep that death benefit above our cash value in order to satisfy the IRS. So having a renewable term annually, so each year as you get older it gets a little bit more expensive, and each year that death benefit's growing to avoid the MEC rules, so it's getting a little bit bigger and a little bit bigger, so each year it's getting more expensive and more expensive. But when you're younger, when you're 30 to 50 years old, it's not that much. You hit 67, you hit 68, 69, 70, he's got a few more years that 5 more years he was thinking of doing this, and those internal costs continue to get pretty darn high. Now there's a strategy on what to do about it, but that's in my next video on it. So be looking for part 2. So here's what's happened over the past, just like 3 years for him, is the index hasn't performed very well that he chose. So his performance has been very, very minimal. The internal cost has been increasing. So he's not seeing any kind of growth within this thing. And as a matter of fact, it's beginning to go backwards. And that can certainly happen with IULs. However, it sounds like it's all bad, but there's strategies for these without a doubt. There's efficiencies for these without a doubt. But this is just one piece that needs to be understood about how they operate and how they work. I am not a guy to sit here and bash these things, but I do want to educate on how they function. Because if you're in a position to be seeing an increasing cost and you don't have any alternatives to change that, even though there's one I'll address in the part 2, then it could potentially be an issue. And I mean potentially be an issue. Okay, so look, if you want some more information, you can go to financialcaffeine.com. I have an audiobook you can download. I even have something called the napkin method, which is me demonstrating exactly how we do this and how it relates to you specifically, and I draw it out. Or you can go to financialcaffeine.com/survey. You can answer some basic questions and get on my calendar. I'm honored to be a resource for you, and don't forget, God loves you. He thinks you're really special, and the only thing he asks for is that you love him back. That's it. That's it. Know that you're loved. Know that you're blessed. Have a great day.